Thanks so much for tuning in to this conversation on Talking Point. It is a set of businesses which are in focus and which are a part of the defense sector and which are the shipbuilders, if you will, the shipbuilding sector. Because while a couple of weeks ago, a couple of brokerages came out and downgraded some of the defense names, saying that the only concern is rich valuations because the book-to-bill ratios and the execution seems flawless for now. The question was around valuations. Then, subsequently, a couple of other notes have come and said that what about post-2027? Can the margins which they are enjoying right now come off? Can viewers or investors realistically take a call on what business could look like post-2027? ICICI Securities wrote that note, which we highlighted, wherein they had this very steep lower price on Mazagon dock. Now, therefore, we thought it best to get in the management and try and understand how does the management think about the business. So, Mr. Sanjeev Singhal, Chairman and Managing Director of Mazagon Dock Shipbuilders, joins us to talk about how the landscape may be like. And with me is my colleague Sajeet, of course, joining in. And Mr. Singhal, thank you so much for joining in. I know we spoke about 4 or 5 days back, but it's great to have you back because just to try and clarify the air around some of the concerns. Now, one of the notes, Mr. Singhal, suggests that the margins of Mazagon dock in particular have improved in recent times, led by ahead of time delivery of vessels, lower cost incurred, so on and so forth. All of that may not remain a constant, and therefore at some point of time, these very high operational metrics may not sustain. What would you say to that, sir?
I would rather discuss the fundamentals of the company. As far as the company is concerned, you are well aware that we have been into this business for 250 years. We are a debt-free company. There are no loans, no advances, no liabilities which are of any significant nature. As far as the company's outlook is concerned, we are very bullish with respect to the growth of the company. We have recently acquired additional 15 acres of land adjacent to the existing location of Mazagon Dock Shipbuilders. And we are also into developing this land parcel as well as 37 acres of land, which is at Nava, approximately 10 nautical miles from our existing location. And intend to spend approximately 4,000 to 5,000 crores over next 4 to 5 years. So this is just a framework which I wanted to give, considering the business outlook, which is internal to the company, which I am sharing. That we believe that the company is poised to grow manifold over next couple of years. Now, coming to your query with respect to the future orders and the margins, yes, margins, we would not be able to commit with respect to anything that what margins are sustainable. It's a business which evolves and each project is a different project. But yes, what I can say with respect to costs, saving on cost is a continuous endeavor. We have been working on it, and if you look at our wages ratio, the employee dole out, that has been consistently coming down in terms of percentage. There are no plans for any kind of a significant hiring. Yes, some small hirings may be there based on the technical requirements. So we don't see any significant change in the cost structure going ahead. With respect to the project 75, which we are executing currently today, the Scorpion submarine, 6 in numbers, we have delivered 5 submarines. The 6th submarine is also slated for delivery probably in the 3rd quarter of this financial year. And moving ahead, we are expecting order for another 3 additional Scorpion submarines, for which we have submitted all the details to the ministry, including the pricing. And 2 rounds of costing committee evaluations have already taken place. We believe that the costing committee is close to firming up their recommendations, and post this, based on certain discussions and in case any negotiations are required, we expect this order to be finalized anytime soon. Apart from P75I, which is 6 number of submarines with AIP fitted and lithium-ion batteries, where we are participating in collaboration with TKMS Germany. And here also the positive news is that as far as the field evaluation trials are concerned, the offer submitted by the combine of TKMS and Mazagon Dock Shipbuilders has been evaluated, and that evaluation is complete and successful.
Sure.
So this also is a positive development, and we expect if the things move as per the timelines, then by next year there should be positive news on this front also. Apart from the shipbuilding orders, which I have indicated earlier also, Project 17 Bravo, which is a follow-on of 17 Alpha, 4 number of frigates which we are executing right now. 17 Bravo, this could be 7 numbers or 8 numbers, maybe divided on 2 shipyards. So this also is being discussed and likely to be, this would be a requirement. Recently, we have participated in next generation corvettes, which again is a corvette project for 8 number of corvettes, which will be divided over 2 shipyards. So here also we have submitted our bid. So with the due course when the bids are opened,
Right.
next generation corvettes are there, next generation frigates are there, next generation destroyers are there. So we see a continuous pipeline apart from, of course, the offshore projects, which we have recently again revisited this area. So last year we got an order from ONGC for 1150 odd crores. This year we have received 4,600 crores. So this also is a separate stream of revenue which we are developing.
Mr. Singhal, sorry, I just want to come in because it's just so much to pack in an answer that it becomes difficult. So you're bagging a lot of contracts. There is no question on the book-to-bill ratio, let's say. So one of the things that is, or one of the concerns expressed is that once you start executing the new orders, while it's difficult to predict what will happen to cost, but your revenue recognition methodology, they say, is going to be likely to be milestone based, and hence margins could come off. Now, could you explain if this is indeed going to be the case?
No, revenue recognition is not milestone based. It is based on the cost to completion. What is our assessment with regard to the cost of completion and how the costs take shape? So during the initial stages of the project, it is quite possible that until the orders have been firmed up and placed, the revenue recognition or the cost to completion is calculated on a conservative basis. But this has been our experience, and considering the learning curve which MDL has already crossed, we see, and based on the past experience, so there have been substantial savings in the cost, and there are a lot of processes and methods and research and development which is regularly going on, which helps in bringing down the costs of execution. I am not committing with respect to the margins, whether they will be 20% or 27%. But yes, based on the past experience and based on the order profile, we believe that the margins also would continue to be reasonably healthy.
Mr. Singhal, Sajeet here. While you're sitting on an order book of nearly 40,000 crores as we speak, you have enlisted us some of the projects where you have already bid in or you would be nominated over the next 12 to 18 months. Is it possible for you to give us a ballpark figure of kind of order book order prospective orders that will flow in the next 12 to 18 months? You spoke about 17 Bravo, which is again 7 to 8 numbers. Then there is, I think, if I'm not wrong, the acquisition AOC has already approved 8 corvettes. DAC has approved 8 corvettes, which will be divided again with between two shipyards, you and maybe possibly Cochin shipyard, which would be nominated for that. And then you have the project 75I for additional 3 Scorpion class submarines, which is coming in. What could be the prospective book that would come in over the next 12 to 18 months, if, as and when the government releases these orders?
I can say, as far as the current scenario is concerned, by and large, the orders are not on nomination basis. It is on competitive basis. So I would not be able to predict how many orders Mazagon Shipbuilders will be getting. But yes, what I can say, based on the orders in which Mazagon Shipbuilders would be interested and where we are a strong contender, we believe that during next couple of years, the order size would be approximately up to 2 lakh crores, which would be available for the shipyards in totality. So what pie actually Mazagon Shipbuilders is able to bag, this will depend upon what kind of bids we are submitting. We internally remain positive, very positive about it, considering our inherent strength in these particular segments.
Order which is 17 Bravo for frigates, and you said 7 to 8. What would be the size of that?
This includes 3 submarines of Scorpion. This includes 75 I, 6 number of submarines. This includes 17 Bravo. This includes next generation corvettes. This includes next generation destroyers. So these are the orders which are likely to be finalized over next couple of years. And a broad value which I can look today is could be in the range of 2 lakh crores.
And that would be distributed between 2 to 3 shipyards. That's what you're saying, between you, Cochin, and maybe Garden Reach.
I am not saying between which shipyards. These are on competitive basis. Some of the orders are likely to be split between two shipyards. Some of the orders will go to a single shipyard. Like in case of submarines, 6 number of submarines, this will go to a single shipyard. The 3 submarines, this will go to a single shipyard. With respect to next generation corvettes, with respect to follow-on of frigates, 17 Bravo, with respect to next generation destroyers, yes, there can be split between two shipyards.
Because if you look at the capability as we speak of shipyards, you are the most capable in terms of building of submarines. Cochin has that capability of indigenous aircraft carrier and corvettes and others, which can be split between many couple of shipyards which is there. So even if you look at it between in the next 24 to 36 months, as and when all those approvals come in and your bids are scrutinized, financial bids are scrutinized, is it fair to say that you're looking at between 80,000 to a lakh crores of additional order book coming into the books?
I would not be assigning any figures. Sorry for that.
But given the numbers, I'm talking about the 2 lakh number which you gave.
MDL is concerned, I can discuss about what is the expected value of the orders where we would be participating and where we would be focusing. Of course, we are not looking at aircraft carrier. So the orders which we are keenly focusing on, I can discuss about that. What is the expected value or the size of the orders? What MDL is able to bag, this only time will tell.
So, is it fair to also say that, that the concern that the market has, that there is no visibility of orders beyond 27 or 28, it's ill-founded, because there is this order book which is coming in and which is in the process, and it will come in over the next couple of years?
You have to understand, the viewers also have to understand the basic structure of this industry. If you really look at it, as far as the shipbuilding orders are concerned, they are always lumpy and they have a long gestation period. Currently, the order book which I am executing, it comprises of 3 major orders. That is the P-75 6 number of Scorpion submarines, which was awarded in 2005. Subsequently, the 15 Bravo destroyers, 4 numbers of which we have delivered 3. Now the 4th one is slated for delivery this year. This was finalized and awarded in 2011. And the 3rd major order, that is the frigates order, this was awarded in 2015. 4 frigates for which we will be starting the delivery from this year. So this is a typical nature of this industry. These orders are large value, these are lumpy, and there is a gestation period between finalization of these orders. So today when I am talking of at least 4 to 5 large value orders, so I see this is a very, very promising scenario for this industry. If I am talking of 3 submarines under 75, I am talking of 6 submarines under 75, I am talking of next generation corvettes, 8 numbers, I am talking of 17 Bravo follow-on frigates, 8 numbers, I am talking of next generation destroyers. So I see a very, very promising scenario, and the orders getting finalized much, much earlier than what is typical for this industry.
So how do you look at the capacity? Because you said you're going to spend 4,000 to 5,000 crores over the next couple of years as you expand between Nava and Mumbai port. Once that happens, how much your capacity will go up for corvettes or destroyers and submarines?
Capacity for a shipyard is in terms of numbers also, as well as the size also, with respect to what size of vessels you are able to accommodate. Right now, we have a capacity of accommodating 11 submarines and 10 ships simultaneously. So 21 vessels we can accommodate at the existing location itself. With respect to the new locations which we are developing, we are going for a significantly larger infrastructure, which can take vessels of much larger dimensions. So this gives us a better flexibility. If you are looking in terms of capacity, maybe this would lead to a doubling of the capacity, 1.5 times to 2 times of the existing capacity. And in terms of dimension of the vessels, many of the larger vessels which we are not capable of handling today, we cannot handle it right now. So this would make the yard future-proof with respect to the dimensions of the vessels. So any large vessel also we will be able to accommodate with comfort once the infrastructure is in place.
So, Mr. Singhal, okay, I'm trying to invert the conversation now. there is a large set of orders coming in. I heard you say that some of these might get finalized earlier than what was maybe anticipated by the street, and you are doubling your capacity in select spheres of work as well. Is it therefore wrong to think that post FY26 or FY27, when your revenue will see a significant uptick, let's say in the next 2 or 3 years, that there will be a precipitous drop in both revenues as well as profitability? Is it wrong to think that? Would you reckon that there will be a trending move higher or trending move ahead for revenues, executions and profits for the next few years?
See, internally, we remain positive with respect to the outlook and with respect to the future order position of MDL.
Post
Had it not been the case,
sir, post FY27 as well. I mean, sorry to come in, but I'm saying everybody knows that until FY26, 27, it's all good. I think the question is only coming for post FY27.
In case we are not bullish post 27, we would not be planning for investing 4,000 to 5,000 crores.
Okay.
Then the existing yard capacity would be sufficient in case I am not reasonably bullish with respect to the future order position.
That's true. That's true. Okay. So good to get that clarity. Just one quick follow up there. Would all of this be used for domestic purposes or B2G India purposes, or would you believe that there is a large export opportunity as well for you?
Yeah, export opportunities also exist. We are trying to tap this market also. We have an export order right now for 6 number of ships to Denmark. And we definitely intend to expand this segment also. Exports will also, we are also exploring other countries. This area definitely remains open. One of the reasons for expansion is to add to the capacity so that we can cater to repair maintenance, we can cater to commercials, we can cater to exports, apart from the naval and coast guard requirements.
Give us a sense of the cash flows as well, because today your 85% of revenue comes from construction, 15% from repairs and maintenance. Will this ratio change as you go forward, because you get a higher margin on repairs and maintenance as compared to construction? So will that ratio also shift as we go beyond 2027 and as you get more repair and maintenance? And I guess the refit program is also coming in for some of the Scorpion submarines.
Yeah, this I would like to bifurcate it slightly. As far as the shipbuilding is concerned, yes, although we are eyeing at the repair and refit segment, but I primarily our focus will remain on the new build. So new build will be a primary focus, and this percentage with respect to shipbuilding is not likely to change significantly. Maybe I don't see a revenue recognition of more than 10% from the refit and repair segment. But yes, as far as the submarines are concerned, submarine is an area where repair and refits, this also is likely to contribute in a significant manner. Because we have recently delivered 5 submarines, 6 we are going to deliver, another 3 of the same series, 9 submarines. And submarines have a typical life cycle of around 30 years. And post that, after medium refit and life certification, we can add another 10 to 12 years to the life of the submarine. So during this period, there are periodic refits. Like if I take the case of 2017, we delivered the first Scorpion submarine. So the refit of the first Scorpion submarine is falling due in 2025. So this in 25, we expect that first of the Scorpion submarines would be coming to us for refit. And we have delivered from 17 to 22, 5 submarines. So practically every year, every 12 to 16 months, 18 months, the second submarine, third submarine, fourth submarine, fifth submarine sequentially would be coming to us for refits. And by the time we complete the last submarine refit, the second refit of the first submarine becomes due. So this is a sort of continuous cycle. So at any given point of time, once the cycle starts, we would be having multiple submarines with us for their refit cycle. So if you look at the submarine business, once we are building a submarine, it gives a continuous business cycle for next 40 to 50 years. So this is a very long drawn cycle. And here the value of refits and overall, etc., is a significant chunk.
Got it. Mr. Singhal, one last question from my end. I'm drawing it back to the first question, and you gave me a part answer. I just wanted some clarity there if you can. I understand you can't give commitments on margins because it's a very moving piece. But I heard you say that the margins you expect will continue to remain healthy. Now, how do I define healthy, sir? Because healthy could mean around this 20% mark that you are doing. Healthy could mean slightly higher than that. Healthy could well mean 15% as well. What is healthy? Some range, if not an exact number.
Yes, as far as the range is concerned, I can only say that for a industry of shipbuilding industry, margins, anything more than 10% is a healthy margin.
So the problem is you've been operating, let's say for example, you're operating at 15% in FY24. The expectations are that you'll go up to 21-22% in FY25 and 26. Could there be a drop back to 10% after that?
A very, very precise projection into the future that would not be appropriate and that would not be feasible at this stage, particularly when we are in the process of finalizing various orders. So depending upon their timing, depending upon their size, depending upon when we actually get and how much we actually get. So then there are many variables and determinants. So giving a number at this stage, because these are not the existing orders, we can discuss with respect to the existing orders, but with respect to the orders which are yet to come, it would not be proper on my part to define these values at this stage.
Okay. Okay. Well, we wish you all the best, Mr. Singhal. Thank you so much for taking the time out and being with us on this edition of Talking Point. Really appreciate your time.
Thank you very much.
All right. That's Mazagon Docs. Well, clarified on revenues, Sajeet, but just I was hoping that they would speak about whether margins could come off from 21-22%.
It's a little tough, right? Because it's based on percentage completion and the kind of, and as and when the order comes in, and he's saying that Mazagon is has a competency in submarines and destroyers.
Yeah.
You have Cochin, which has a competency in aircraft carriers, and between Mazagon and Cochin, you have corvettes and frigates, which they can together make. Even though it is said that there are other players, but the cost, they work on a negative working capital, so that's an advantage to them, because that it brings down the financial bid that they put in for any of the orders much lower compared to any competition, because the cost of capital for others are much higher. We've seen L&T talking about it, that we have put in so much of capital, but we are not able to recover the capital there. That's because the cost is very high, and for them, because they are 50-year-old companies, the cost of capital is very, and the biggest takeaway is that 4,000 to 5,000 crores, if he's putting in capex for the next 2 to 3 years and increasing the capacity, doubling the capacity, he's talking about from current 10,000 odd crores, he's looking to a revenue of 15 to 25,000 crores in the next 5 to 8 years is what they're looking at. So that is something which we need to. He's not saying it, but he's basically saying that I'm putting that 4,000, 5,000 crores.
Why would I do the capex if I was not bullish post FY27? Indeed. Okay, viewers, with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.